Hey, welcome back, everyone. Tom from Park Avenue Trading, your chief dealer, keeping you sane in these insane markets. Euro dollar analysis for July 9th, 2025. It's 10:34 in the morning. Well, the EU is finalizing a framework deal with the U.S., possibly within days or by late July, aiming to avoid higher tariffs being reimposed on the European goods. Now, under the proposed agreement, a 10% reciprocal tariff rate would apply to most EU exports, while current higher tariffs, 25% on cars, 50% on steel and aluminum, remain intact. Now, Trump warned that he intends to issue informal notices imposing 50% tariffs on goods like copper, pharmaceuticals, and semiconductors. These letters could be delivered as early as August 1st. He's trying to pull back the pharmaceutical business back into the United States, which is really a national security interest. You know, right now we don't make any of our own drugs. How retarded is that? If a war breaks out, guess what? We have no antibiotics. We don't have any drugs here in this country. We import all our drugs. Insanity. So the broad expansions reflect Trump's escalating reciprocal tariff campaign and intensifying trade threats. Now, because they have until the end of this month, really, the Europeans Germany and Italy are really pushing hard for a fast resolution to shield their export-heavy industries, especially automotive for Germany, from damaging tariffs. Meanwhile, other European states are criticizing Germany's special auto carve-out proposals for undermining bloc solidarity. Is that the first crack in the glass? So, deal deadline, negotiators aim to finalize terms before August 1st, when higher tariff rates are set to kick in. Now, if talks collapse, the U.S. swiftly can impose new tariffs, while the EU is prepared to retaliate with its own duties on roughly $95 billion of U.S. goods. But Europe would lose this battle. I mean, they would lose it. The EU is reportedly considering lower tariffs on U.S. imports and offering concessions on non-tariff barriers to secure a deal. So, growing uncertainty that's happening in the marketplace, at least temporarily, a 10% framework deal to stave off further escalation. President Trump's threats of a steep 50% tariff on key sectors loom unless negotiations converge rapidly. So what do we have going on in the euro dollar? So with all this tariff stuff looming in the background, we're kind of frozen, okay? Euro dollar came off a little bit, touched the 0.382 retracement off of the recent low we had just measuring this leg. So the euro dollar is stuck in between these points right here. Let me get let me get a box. Let's put a box up around the thing. Do I got a box? No. Where the heck is my box? Well, anyway, let me just do it manually, you know. What the heck? I mean, here we go, rectangle. I found a rectangle, finally. So we're really stuck in between these 2 points right here. Now, even if the euro dollar comes up, this is going to be some serious resistance up here because the tariffs are weighing in. So I think that we're going to be stuck a little bit in consolidation for a little while. However, if there's some behind-the-scenes news that we don't see, like i.e. big banks and hedge funds kind of know about, if we break down through this low, we could be trading right down to this 0.618, 115.90. You know, markets are usually very cautious. So let me see where we were. We were at the high of 118.29, right? So let's see. It's got to get through like this top right here. If it's going to show any type of strength, it's got to get through right here. I'm going to go to this low bar's close right there, 117.75. That level, it has to get up through that level. So it's going to meet some resistance up here. So if I'm trading the euro dollar straight, I'm looking actually to sell resistance with a tight stop on it, thinking it's coming back down into the range and coming back down to the 0.382. Now, if we get two pops down through the 0.382, we could see a little bit of euro dollar kind of weakening for the short term until, again, that tariff stuff runs its course. If we look over at the euro dollar versus the US dollar index, as soon as that chart pulls up, we could see that the US dollar index is actually starting to move up a little bit because of dollar yen. Here's the US dollar index. We could see it is still below the support that comes back to this level right here back in July of 2023. This is a weekly chart. We can see we punched down through it. We could get a rally. I don't think we're going to get that much of a rally in the US dollar index. Potentially, say, to 98.65. Heavy duty resistance now at 99.55. So what we're looking for is the US dollar index to come off to fuel a euro dollar rally. It's starting to retrace back upwards right now because freaking dollar yen. Dollar yen is like just incredible. It's very, very resilient. So make sure you come out and check out my next video on sterling yen, sterling dollar. All right, let's look over. This is one more quick look at the euro. All right, so as it stands right now, euro dollar resistance right now 117, say 80. Support's sitting right at 116.80. We're right in the middle of the range. If we break down lower, we could be drifting towards the 0.618, down at 116 the figure. A break above 117.80, there's going to be resistance all up here until that trade deal gets solidified. I would think that if I'm going to do anything, I'll be shorting the tops over here, looking with a tight stop loss on it, looking to get back down and potentially even break downwards towards the 116 the figure. All right, so that's what I got going on for you guys for the euro dollar today. Check out the description. Get yourself a free video series and an ebook talking about how to master breakouts. And I look forward to talking to you in the next video. Cheers.